I'm Dr. B, and yes, I'm a real ER doctor. So you may be wondering, what am I doing here in this space? Well, after years of pain from sports injuries, I listened to my doctor and had to pivot into a career that would keep me off my feet as much as possible. I also have a degree in finance, and so it was a natural transition to join Verified Investing. I'll share my prescription for becoming a successful investor right here on the Market Pulse. Welcome to the Market Pulse. I'm Dr. B here at Verified Investing. Today we're going to be talking about the Fibonacci sequence, Fibonacci retracements, some of the history behind this, and also how it applies to the everyday stock market. Okay, so we're talking about the Fibonacci sequence or the Fibonacci levels. First, you need to understand who Fibonacci was and how they apply in real life. So Leonardo Fibonacci, he was an Italian mathematician. He developed the Fibonacci sequence, which is essentially a number sequence that occurs in nature over and over and over again, right? So it occurs in nature here. It occurs in the branches of a tree, the spiral of a hurricane, the spiral of our galaxy, the spiral in different shells, okay, the seeds in a flower, the petals on a flower, even on animals. Incredible when you start to look at this and do some research on this. And believe it or not, it occurs in the stock market. So you may ask, well, Dr. B, how are we going to make money using these calculations that are from 1,000+ years ago? Well, they occur in the stock market. And if you don't believe me, I'm going to show you how. So this is the S&P 500. This is the weekly chart. And you can see here that this was the COVID lows, all right? COVID lows. This was the 2022 highs. And as the price started to come down, we should say, okay, here we have a lower high, and we'll talk about that concept in a later course, in a later episode. But you start to see the price coming down, and now you're looking, where is the bounce going to be, right? That's the key. The Fibonacci retracement helps you understand where the likely bounce will be. So in general, we take from the low to the high, and now we're looking for a pivot low, right? And this is the 50%, right, retrace to this level. You can see over here on the Fibonacci tool, you have 23.6 retracement, 38.2% retracement, 61.8 retracement. These are the most important two right here, the 0.5 and the 618. But in general, after you've had a big run, typically stocks, crypto, commodities, whatever they are, they retrace to about 50%. And you can see here that the lows of the market were exactly on the 0.5 Fibonacci level. That's so key to understand that. And, I'm sure there were other factors in the market that helped the market bounce here. But in general, probably most traders, most investors, people who are pros at technical analysis were looking at this level saying this is likely going to be the reversal point, and look at the run afterwards. Okay, so we're going to go over to the next chart here. And, you have to understand there's two different types of Fibonacci levels, right? There's pivot lows and pivot highs. We were just looking at a pivot low, and I'll also show you how to look at pivot highs. So again, this was the same chart on the S&P 500 on the weekly chart. We're looking, where is this pivot low supposed to be? Where is it going to be based on the Fibonacci level? So you take your Fibonacci retracement tool, you start here, you go to the top, and that gives you your level. Let's go on to a couple examples here. This is Google's chart on the weekly chart, all right? So again, here's your pivot low, here's your pivot high, and you can see here that you have a couple different levels. You have your 0.5 fib right in this level, all right? Oops, I hit the screen there, but it's right here at this level. Let me just erase this so as not to confuse you. So you have the pivot low here, right at the 50%. You've had this big run from about $50 on Google stock up to about 150. Question is, where is it likely to pull back? The 50%, boom, right here. Basically kiss that level right in there, and ran from about $100 up to $120. And the stock was still in a downturn, likely because the stock market was still heading down, right? The S&P was heading down. Then we say, all right, where's our next level? Where is the next area that the stock is likely to bounce? Well, then we look at the 618 level, right? 618. Here it is. Look at how many times the price hit off that 618, and then look at the move. Amazing, amazing. Also, look here where you can see this, what was support, right, in this area, now became resistance, right? So we can talk about support and resistance and SR flips and things like that in another episode, but that's essentially what's happening there. So again, the price has made a major run to a high. It's established a high, and now we're saying, okay, where is it likely to bounce? We're looking right here at the 0.5 fib, and then also as the 0.618 for the next areas for a pivot in the markets. So now we're going to look at Google stock on the 10-minute chart. This works on all time frames, the weekly chart all the way to the 1-minute chart. So again, we're looking here at Google on the 10-minute. We've had a run here from about $135 up to about $145. We're saying, all right, where is the pivot low going to be? Where is the pivot in this chart going to be? Well, again, we know it's most likely to be here at the 0.5 or the 0.618. Notice how the price came down from this level and didn't quite get to the 0.5 right here. We kind of almost touched it, maybe a couple percent away from this area. So we rallied back up, and look at the level where this stock bounced right here at the 0.618. So very key to understand how to use Fibonacci levels in the markets. Now we're going to look at pivot highs, okay? So this is Apple, the weekly chart. And for pivot highs, we look at a stock that has fallen, okay? And we're looking, okay, where is it likely to bounce to? Where is it likely to pull back from? Where is that pivot high going to be? And then where will it likely fall? So you have your pivot, you have your pivot high, right? Pivot high and pivot low, okay? Or you can call this a pivot low. So you have your pivot high, pivot low. Where is this likely to bounce to? This actually came all the way up to the 50% right here and then pulled back, right? Small pullback. Then it came up here to the 618 right here. This is the 618. And then it pulled back, right? And then finally it came up here to the 786, right? 786. And it pulled back even further, all right? So now we're looking and we're saying, all right, this is still the pivot high. This is still the same pivot low here as it was here. Where is the next pivot high? The same thing. Most likely it's going to the 50%. There it is. The 0.5 fib pulls back from about $28 to $23. And you can see here, this is a pretty rapid pullback. So very important to understand this concept. We'll go over a couple other pivot highs. This was somewhat complex because you did have several levels here on the Fibonacci retracement that it did hit. But again, let's look for some more pivot highs. So we're going here to NVIDIA. This is the 1-hour chart. So we're looking for where is this stock likely to start to fall. We've made this huge fall here, right? We've had this huge fall on NVIDIA. And here's our low. Now, where is it likely to rebound? Again, the 0.5 Fibonacci level, or the 50% retrace. That's just another way to say it. And here it is, 0.5 fib. Right here, the market pulls back from $132 to almost $120. Really powerful. Very, very powerful. Very powerful. So let's move on to the next chart here. All right, so many of you remember this chart on the S&P 500. This is the weekly chart. We have this major trend line here, And let's say that this is the top. Let's say that this is the top, right? And we're looking and we're saying, all right, well, this is the top, right? Let's just come up with that theory. And we've had this major run from here all the way to 512. Now the question is, where is this likely to pull back? And all of you should say, all right, this is likely to pull back in the middle, right? The 0.5 Fibonacci level. So let's take a look. All right, so this is zoomed in on the S&P 500 weekly chart. You can see we're forming this wedge pattern. We're right here at major resistance on the S&P. And we're saying, all right, well, okay, I'm selling here, Dr. B. Where should I buy back in, right? Where is this likely to bounce, right? We're looking for a pivot low here. And the area for a bounce, again, the 0.5 fib. That's the most likely area. Here's the 0.5 fib, right in here. So again, we've taken our Fibonacci level from the lows to the possible highs, and we've said it's about 50% is where it will pull back. So let's say price comes down into here. This would be your first buy level right here, right? Right here at about 431. But let's say that the price starts to come down even further. Where's the next area? 618, right? 618. Here it is. So let's say the price comes back up and comes back down. Here's your 618. All right. And we'll talk about scenarios if the market doesn't necessarily follow the Fibonacci levels or different levels that we've put in here on the charts. Sometimes it doesn't always work, right? And we have to maneuver through investments or trades and so on and so forth. We'll talk about that idea. One thing I do see here is you do have this nice pivot low right in this area, right at the 618. So this would be a nice double bottom. And we'll talk about double bottoms, double tops, and different chart patterns in other episodes. But you can start to see how technical analysis is so powerful when you really look at all of the different factors, put it all together, and you can really deliver some amazing alpha in the stock market if you just step back, look at the charts, learn the charts, study, and focus. So I hope you enjoyed the Fibonacci sequences. Practice these on your charts. Go to TradingView or whatever trading platform you have. Practice this over and over again. Go from the weekly chart all the way to the 1-minute chart. Practice, 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 and you'll see how amazing these levels and these tools are in the markets. When you start putting it all together, that's when the aha moment comes. We'll see you on the next episode. Thanks for watching. Take care.